Hello traders, Gary Wagner here just before 10:30 in Honolulu, 4:30 in New York on Thursday, the 11th day of September, 2014, and this is the daily report for gold and silver. We have a continuation of the downside pressure as we see the precious metals complex as a whole trading lower. First to gold, off of the lows, currently trading at 1241.50 and change. The low today has been 1235.50 and the high 1249.80. Silver also under dramatic pressure today, trading off about 25 cents on the day. It is well below $19 per ounce at 1869.68. The low on the day is 1855 and the high 1894. More on silver in a little bit. Now, as we look at other markets affecting gold today, we look at the dollar index, and the dollar index is currently trading higher on the day. It seems relentless. Now, it's only up about 8 points at roughly 84.31. S&P is trading a little bit higher on the day. That's up about 1.76 points, with the Dow off just a little bit, off about 19 points on the day. So as you know, yesterday we did put out a trade recommendation, a little late obviously, but nonetheless it is working in our favor at this point. We went short gold roughly at 1249, market currently trading roughly at 1240, or about $9 below our actual sell price. The key, as far as I'm concerned, is the fact that we broke through two critical areas, and my hesitation was that I wanted to make sure once we broke below this 1280 right in here, that next level to me, which was very important, was 1261. And what I didn't want to see was, for example, the market to break below that line as it broke above here, only to simply return into the band the following day. And that's why we waited a couple of days before we actually implemented a short position. I wanted to see really a clear break below 1261. So what are we looking at right now? Well, the first thing that we want to realize is we are trading roughly right at this particular low. This is the low that we got. We had a $200 rally, which began at the end of 2013, beginning of 2014. From there, the market retraces, and it was an odd place for it to retrace in terms of a technical basis because it was well below a 61% retracement, which is what we were effectively looking for, but it still traded above the 76% retracement. That's at 1230. So we saw the market form that low, and then we had a $100 rally. Now, from that $100 rally, as you can see, we've pretty much headed straight down, but I really wanted to see the market break and sustain itself below this 1261. That was the reason for my hesitation in initiating a short position in the market. So what I'm looking at right now is as follows. The question is, can we hold this 1240, this area right here? The low today, 1235, so we've absolutely dipped below that point. Market is trading right at that point with lows below there. If this level cannot hold, we want to see if and how it reacts when it gets to about 1230, because that's really the next target or level should we get effective trading below this particular low, and whether this low will hold for support. Right now, it apparently doesn't look like it will. Now, should the market break below there, on a technical basis, we really don't have any real support into the market until we effectively get to this double bottom. This double bottom is created right here, of course, because on these two occasions, as the market came down, it tested 1180 and popped back up. Both times it hit 1180 and popped back up, we got a substantial rally of about $200 in both occasions, both here as well as here. So traders, obviously we are looking to maintain our current short position in gold. We will look to tighten stops rather quick on this trade. We want to see, of course, how it reacts at this potential support level, the 1240 level, where we're just hanging at. If it breaks through, we know we probably have a clear shot to about 1230. So what about silver? Well, quite obviously, we broke through any kind of level of support that I thought might occur in the market. If you recall from yesterday, we put in this straight horizontal line. We talked about the fact that on most occasions we found over the last year this area just below $19 to be fairly supportive. We did dip. We talked about the two occasions here as well as down in here where we dipped well below that. But for the better part of the last half of 2013 and throughout 2014, this level has held. That's obviously not the case. We'll take a serious look at where we think this market is going, but it does appear that it is headed lower. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for the weekly wrap-up and review. Bye-bye.